Thank you for joining iMeet. When you hear the tone, you will be the 22nd person to join the meeting.
Check. Can you hear me? Doesn't hear me. Check. Can you hear me? Somebody type in. Check. Nothing's not going on. Hello, check. Just testing to see if this thing's working. Okay, good. All right. We're going to get started here. Good afternoon, everybody. This is David Blake with Tuesday Tech Talk. And today we're going to quickly review the last couple of days, try to figure out what's going on with this market. Have a kind of a turnaround day again today, so it is kind of hard to figure this out. Having problems with these noises here. Hold on one second. Okay. Anyway, if it's the first time here, I usually talk about 20, 25 minutes, and then we open it up for questions about what we either talked about or stocks or something you may want to look at, and we'll take a look at those various sectors. What we're going to do this week right now is we talked briefly last week about the market being in a pennant formation, and it looked like we were ready to probably break one way or the other, either to the upside or the downside. And we're still going sideways, and we're still in this trading range. I just looked today. We were down about 180-some points, and I thought we were starting to break to the downside. However, the S&P 500 and the Dow Jones both basically have bounced off of their 100-day moving average on the downside, which is where it's been, where they've been finding support for several weeks now. It is at a where we are getting close, though. If this thing would pick up on some selling, it might give us a little bit hint that we maybe go a little bit further. Anyway, last week we saw a big rotation out of utilities. The REIT sector, that's the new sector that was spun off from the financials in mid-September. Telecommunications stocks and consumer staples also saw a lot of selling going on. And basically what the reason for that is that we're seeing a rise in the U.S. dollar, and we're also seeing, which is causing a rise in rates as of this morning, the CBOE Group FedWatch had a December rate hike pegged at about 70%. That's that's about the highest it's been. So that's causing this rotation out of the safer, higher yielding sectors and into more of a growth strategy. One of the reasons for this, and we've talked about this over and over, throughout the summer and all, is that especially like in the consumer staples, we're seeing that sector trade. A lot of the stocks traded maybe 20, 25 times earnings in some cases. Historically, that group trades at about 10 or 12 times earnings. So that group has a lot of space to move lower. So we want to kind of keep an eye on that. If you're in those stocks, we've been kind of telling you to lighten up for a month or so. And in utilities, we told you to basically sell back in August. So both of those groups continue to work lower. Where the money is going out of those groups, and it's going into the energy sector, technology, and financials. And we're going to look at those sectors shortly just to see how good they look and what the upside might be. I think you might be a little bit surprised at some of the things that we found when we dig underneath the hood and kind of see what some of the indicators are telling us. So last week, I was scheduled to originally go bullish. However, I can't hear anything. Can't see any charts either. Okay, does anybody else not hear this? Everybody else is fine? Okay. Anyway, the CTI was supposed to go bullish last week. However, the momentum index fell from a neutral, from a bullish +5 to a -2, and which is neutral. And that negative divergence caused us to lay off, go into a buy. The momentum index and the sentiment index are kind of what we use as a confirming indicators for the CTI when we're getting, especially when we're getting ready to flip. What that meant was that the Dow Jones was actually starting to outperform the other indexes, which we don't want to see at market turns. So what we want to see this week, the Dow Jones needs to stay above 18,116.26 intraday. However, the S&P 500 needed to stay above 2144.01, which was broken today. That also will configure into what we're going to do with the CTI. At this stage, it looks like we may extend it out because we're seeing underperformance again today by the NASDAQ and the Russell, and also the S&P 500. On the good side, the Dow Jones Transportation Index is off less than 0.5% today. So that relative strength is when we finally see that index break out, I think that's going to be when the bell rings if we can move back in. But for right now, we're at this stage looking like we may end up moving out one more week at least on the CTI, and at that stage, then we'll keep watching to see whether if it takes out another intraday low, then we'll extend it out until the market's able to have a higher low. So first off, let's take a look real quickly at the Dow Jones. Basically the same as last week. It's stuck between this 50 and 200. Here's this 18.2 area is the 100-day moving average. We did get a little bit below that, and so we're flirting with this on the Dow on the downside. We got down to about 140, I believe, something like that, which we were down about 185. Breaks below this trend line and all, that's going to be our red flag. Now, we're not seeing a little bit of positive build up here in the 30-day stochastic. Remember, I like to see it crossing 50 with some good movement before I think we're getting ready to go to a buy. This is still neutral, and the RSI, 14-day RSI is still basically neutral, moving a little bit positive, but nothing to get too excited about. The ADX line down also looking closely getting positive, but the blue signal line is still trending down, which means there's no trend in the market. Okay, we look at the S&P 500, almost the same thing. You have this pennant formation. That also is in the Dow Jones, that pennant formation. I want to say when we talk about a measured move on patterns, if you measure from here around 21, 28 or so up to about 2165, you can get a target on the S&P 500 of about let's see, 2200, 2225 at the most. And if you get a break below this, measuring this way here, you're probably going to get a measured move down to about 2125. On the Dow, if we break out to the upside, you're going to get an upside target of 18,840. But if we break to the downside, and we should know that probably in a day or two, both of these pennant patterns have reached a limit where usually about 2/3 of the way through, you get the break, and we're already past that. So any day here, we're going to get a move up or down, one of the two to rectify this pattern. But on the downside, on the Dow Jones, I think you can look for a downside target of about 17,725. Okay, the NASDAQ, we're up here flirting with new highs in this channel. It still remains a little bit almost overbought. We are still in an upward trend on that. The 14-day RSI is still bullish. We're trading above the 50-day moving average. You're in a much better shape than you are, but don't get real excited about this thing yet. If the other indexes break through this pattern here, we probably have a upside target for the NASDAQ of about 5,400, 5,490 would be the second pivot point off of in that NASDAQ, and to the downside, you're probably going to check that 5,100 low where we hit in September. So we're not out of the woods yet on that, and I'll show you why later on. Okay, here's the semiconductor, which looks good. Again, it's in that narrow channel going up. You are a little bit extended, so you may get a little bit of a pullback, which you're getting today. I want to keep an eye on that. That looks good. we had that 50-day moving average, bounced it off of that pretty good. But again, when we get to the technology sector, we're going to look at some divergences showing up in some of these. Now here's the NASDAQ 100, which hit a new, I think it hit a new all-time high yesterday. And these are the big cap tech names. You're starting to hear Kramer and some of these guys talking about the FANG stocks again. And what you're seeing when we look at the new week highs and lows in the AD line, we're moving up. However, what we're not seeing is an expansion in the new 52-week highs and lows. It's a very, it's not contracting, but it's just kind of moving along with maybe about 100 new highs to maybe 25 new lows on the New York, and then the NASDAQ, you're using about 85 new highs down to about 35, 40 new lows. So nothing that's really showing power on there. Now, in the Russell 2000, again, we're seeing this looking in better shape. However, a little bit of negative divergence here. This is relative strength again versus the S&P 500. As this thing came up, made this little double top, and it's kind of rolling over here. It's actually down almost 1 3/4 today to 1229. So we're down to here. We're coming in on it's trading now below the 50-day, which is a red flag because it's been outperforming. And also you're seeing as it is up here, couldn't quite make a new high. You're starting to see a rollover in relative strength, which is again a red flag. And you're also not seeing this move to a new high confirmed by the 14-day RSI. So especially with today's move, this is a little bit of a concern to me because you want to see the small caps leading. They've done quite well. The thing that looks the best that we've talked about since the summertime, and we just can't seem to get that breakout, the Dow Jones Transportation Index. Going back a long term, 8,200 is going to be huge for this thing to break above. A lot of people are talking about this as a head and shoulders pattern, which could give it a nice move up, probably up to around 9,000 if we really get a strong market on it. You can see the relative strength. We're outperforming the S&P 500. 14 days, also confirming this move up to the highs. We want to see this thing again. About 8150 is good. If you're waiting to really start to put more money in the market, I want to see this thing trade above 8200. You have what you call failed patterns in these, in these markets and in stocks. You have to just as you can recognize a pattern that worked, you also have to be quick to recognize when you get a failed pattern. If this thing comes up here and starts to roll over and comes down below 8,000 again, you probably have another failed pattern, and this index would be a little bit of trouble. Okay, now we talked about the rotation out of some of these different sectors, and I wanted to show you. We want to take a quick look at that to see where the money was going, where it's left. Here's the utility sector. We started talking about selling these things last. In August and so, we'll get another big move down here. This was when we were talking about raising rates before, back in June. It started to roll over then, and now that we're pretty much assured, so they say, for December, you're getting more of a sell-off here. Now, one thing about this thing, and this is also getting confirmed here by the relative strength, also by the 14-day, and down here you can see the 50-day up-down ratio is also showing distribution in the utilities. One thing about these things, these are actually supposed to report decent earnings the third quarter, so you may want to watch that. I don't think there's a heck of a lot more downside to these things, and then unless they start to raise rates quicker. Like if they start going out and say, hey, we're going to have to go a half a point or more, you could get more selling in the utilities. Again, the main reason for that is they're expensive. Okay, here's the consumer staples. We showed a trend line like this years ago with oil, and when you see something like this bounce off of this, it's starting to bounce off the ascending trend line. It broke below it, broke below the 50-day, came back up, could not get back above the trend line or the 50-day. Then we broke down to 100. Now we've broken down to 200. This is the consumer staples sector, and again, it was trading at about 20, 22 times earnings. Historically, it trades at around 10, 12 times earnings. This has a ways to go, and I think you'll see these things move. Here's the distribution. You're seeing it underperforming on relative strength also. I don't have the REITs in here. The reason being the the REIT sector was just spun off from the financial sector mid-September. We don't have enough data yet, the indicators for that, but it's also going lower, and valuations in the REITs are also too higher. Okay, another sector that's not one of my favorites, although I think some of the guys on TV like this a little bit better, and that's the industrial sector. The reason I don't like the industrials, I'll show you the chart next that will confirm this. For one thing, you're seeing a lot of distribution in here. It looks like it's kind of bottoming over here. It's underperforming the S&P 500, but you're trading below your 50-day. So far, you found support at this 100-day and also the ascending trend line, which you want to kind of watch. Today we're at let's see, 57.12. So we're in the process today of trading below that trend lines, so you want to keep an eye on that, because it's the reason being a stronger U.S. dollar brings currency concerns in for these companies. But if you like the if our economy is picking up, you can find industrials that get most of their revenue in the States. Those will be fine to buy. I think you can go with those. But okay, when you look at this, here's the U.S. dollar, the ETF UUP. Okay, it's coming down this wedge over here. We broke above the 200-day moving average at the end of last week. We're seeing a relative strength, so it's now outperforming the broader market. Look at this up-down ratio. This is when you get a move like that. That's institutional money buying it. And today we're up another 16 cents to 25.22. So today we're up here. So that now we're challenging this thing here. And if we break above that, then you're in an uptrend that's going to continue. Maybe up in this 25, 80, 26 area. That's not good for commodities. It's not good for emerging markets, and it's not good for international industrials. So that's why I think you're seeing sell-off in that. They're off more than almost 1% today. So again, if you're looking at industrials because our economy is looking better, I think you want to look at stocks that get most of their earnings here. Okay, another one that's kind of surprising is the consumer discretionary sector. This usually measures the health of the consumer, and supposedly, you're seeing some nice movement here going on the upside. However, we're still being contained by the 50-day on the upside. This little pennant formation to this. A lot of times, this thing breaks down here. You're probably going to go down here and probably break below this 200-day moving average. What I do like in this group, I do like the specialty retailers that we've talked about, whether it be AutoZone or some of these Ulta, Home Depot, some of those. I think you can still go those. Just to go out and buy some of these, especially brick and mortar stores, I don't like it. You're seeing you're still seeing distribution down here in the up-down ratio. 14 days showing some nice momentum, but the relative strength is still just underperforming the S&P 500 a little bit. So you want to be very selective if you're going to go in that. And again, that's you kind of want to watch the consumer sentiment, consumer confidence numbers when they're released to see if that's going to go. Okay, healthcare is another one that we're starting to see roll over, especially today. Today, healthcare is down 2%, so we're at 70, 80. We're down here right now on the sitting on the 200-day moving average in healthcare. Part of that, several reasons for that. Number one, today we're getting a big, almost a 2 3/4% pullback in the biotech sector. If you look at IBB, that's the iShares NASDAQ biotech ETF. It's off about 2 3/4%. You had a couple of misses on that, and besides that, you're also getting some problems with big pharmaceuticals. Clinton presidency would, she's already rolled some of these drug stocks. You look at Bristol Myers, although some of their problems because they've had some drugs not come through. There's plenty of downside to the big pharmaceuticals, which were a little bit pricey also because they pay a better yield. But again, here's this ascending trend line where it finally broke, and now we've come up here and it's bouncing off of that when you extend the line out, and it's not getting above that. And now again, I say we checked that line 1, 2, 3, about 4 times, and now we're down here testing this 200-day moving average. Very important for this to show up. Here's the relative strength. It's been underperforming the S&P for a while here, and you're seeing a lot of distribution coming down on the healthcare sector, which is a red flag. And that's you'd like to see some of the healthcare stocks outperforming a little bit. Okay, with that UUP getting stronger, the dollar getting stronger, it also affects material stocks and commodities. You see XLB today down 1.4%. That's at 46.50. So we're down right about here today. We're trading below the 50-day. It can't get above the 100-day, if you see that in here. So now we're going to probably go down here and test this 200-day. It's underperforming the S&P 500. And over here you're seeing a pretty good drop, and it's showing distribution in this sector. That's going to be because of the strong dollar. When the dollar goes up, the price of commodities comes down. Price gets more expensive for emerging markets. And that's bad for companies like stocks like Mexico and South America and things like that. Now there is one bright spot though in the materials. Well, not in materials, but in the energy. As you can see over here, the energy is outperforming. You're seeing that trading above the 50-day and the 100-day. But you don't see the up-down ratio spiking up like you saw it over here. But it's still healthy somewhat. The 14-day is strong. But this is mainly because it's loaded with the oil stocks. Here's USO, which is a ETF for the U.S. oil fund. You can see quite a nice move here from about 10 almost up to 12. It's off a little bit today. Oil is down about 1.5%. Again, one of my problems with oil after this move, I think oil is going higher, but one of my problems to the upside is a stronger dollar also can clip crude oil prices a little bit. Again, it's priced in the U.S. dollars, so when that rolls, when dollar gets stronger, price of oil is going to be somewhat capped as far as upside. But as far as the relative strength goes, it's outperforming our S&P by 20%. You're seeing great accumulation. I think this probably has a ways to go, even with a little bit of a pullback today. I think nothing goes straight up, nothing goes straight down. If the dollar comes back and tests this 200-day moving average on that chart that we looked at, you'll get some intermittent pops in here. A lot of this also is because of the talks, Russia and the Saudis, and I'm not sure about the Iranians at this stage, but they're talking about production caps. That can help oil go higher. But once we get up here to this $50 range, you're going to start seeing U.S. rigs start to come back on board. So I think your upside could be up around 60, maybe a little bit higher. If you were here on August 22nd, our webinar was "The Time to Buy Oil Stocks." That was a good timing on that. I think they pulled back the week as soon as we had that webinar, but then they took off right after that. And we showed this chart, and this is what technicians would look at this. This is a reverse head and shoulders. We're flirting with that 51.50, 52 area, which would be a breakout for crude oil prices. If you measure from this area to here, you're going to get a price target of around $70 on the upside. It'll take a while to get there, but that shows you where traders are going to look at and guys that are going to buy. You'll also get some more short covering in this area here, which could probably knock this thing up to the $60 range, which is here. So if you're in oil stocks or oil-related stocks, hold on to them, even despite the dollar going up for now. I think you start thinking about taking some profits in those when oil gets up here around 60, 61, because that's where we ran into some problems back here in 04 and 05. This is a multi-year chart, so again, keep an eye on that thing so we can. I think you'll do well holding on to your oil stocks. Okay, what I do still like, and I was actually kind of surprised at some of these sector charts. This is the financials. I've been telling you to go ahead and buy these things. I don't think you're going to get your real quick move like where you buy Bank of America at 16 and get out at 18 or anything like that. But we're bumping into resistance over here. We're off about 1% again today. But with higher rates, it will help the financial sector, especially like insurers and your banking stocks. I know Travelers, Prudential both have great looking charts. But you are getting. What was surprising to me was you're seeing some distribution down here in the up-down ratio, which means some steep like this, you're getting some institutional profit taking, and your relative strength is up, but it's somewhat confirming this. I think this is looking a little bit heady. Now, part of the reason for this is our topic. I think one of the reasons for this is if you've been buying stocks and bank stocks projecting a rate hike, you've had the rug pulled out from under you about 3 or 4 times over the last year. So traders may be hesitant to look for a big move, but I think I would buy the banks, maybe add to the positions on a pullback. You want to see this thing above the 50-day. Right now we're at 1952, so we've pulled back today down to this 50-day. If you get a chance to buy them down here around the 100-day moving average, I think I'd put some money into the financials. And lastly, this is what was kind of interesting to me today, because everyone's talking about techs leading this market. Well, as the tech's making a new 52-week high up here, we've really been going sideways except for the semiconductors for several weeks now after that September low. You're also seeing on a relative strength, you're seeing the tech sector roll over a little bit versus S&P 500. You're also seeing the MACD going sideways during this period, and in fact, right now it's still negative. But look at over here, this up-down ratio. When it's steep like that, so I think some of the institutional players may be unloading some of their semiconductors and some of their maybe secondary tech stocks, especially while the Philadelphia Semiconductor Index is making a new 52-week high. I think you're seeing some firms taking profits on that. I don't know. I would probably wait until this thing breaks below the 50-day moving average before I would start maybe lightening up on some trades. But as of right now, I would still be buying the pullbacks in the tech sector and then moving on. But if I'm looking to put some money to work, especially for trades, I'm looking at the tech sector and the financial stocks. Okay, that's all I've got for today. I see we got a couple questions in here. I'll get to those right now. But in summary, we want to watch the Dow Jones Industrials, especially. I'd like to see it stay above 18,125, 130. We're went down to about 18,140 this morning. If we see a break in that, that's going to extend the CTI out another week. And at that stage, if we keep making lower lows, we could stay on a sell in the market until the Dow and S&P find it within themselves to make a higher intraday low during the week before we can flip it over to a bullish. So we're at a turning point. Keep watching those pennant patterns that we have, formations in the S&P and Dow, because they're very extended. Usually you don't see those things last more than 2/3 of the way through that pennant, and we're past that now. So I think within a matter of 3, 4, 5 days, you're going to see a break one way or the other. If it breaks to the upside, check out the 52-week highs. If we're still only getting 130, 140 new highs, that means maybe the FANG stocks and the big tech stocks are leading the breakout. If we break below, then we probably have a little bit. We're probably going to go down, at least maybe test that 200-day moving average. So I'm still cautious on this. I'll go with it whichever way it breaks. But like I say, we're getting a lot of mixed signals on it. But we're close to resolving this pattern here. Like I say, within 4 or 5 days. Okay, I'm going to open it up now. Just got a couple questions in here. Okay. Yeah, what about boom? Let's see. Z charts. Is it possible to change the color of the green line on the lower charts? Yeah, I think so. If you go up to the smart chart and you look at view, at the top of it, it'll have something in there. It's called the background color. So you can change this to black or whatever you want to do. Okay, I don't see any more questions. I've been going about 30 minutes. SRS, real estate short. Let me take a look. Okay, I'm going to go ahead and share the chart page because I see some other stuff coming in too, and see if I can show you my charts, and we'll look at a couple things there. Okay, can you see my charts now? Okay. And we're going to look at BPFH, and we're going to look at SRS, and RBA. Okay, the WTI pullback was used by BP or C. Okay, let's take a look real quick at some of these things. Okay, first one was on the real estate short, SRS. Short on it. Let me see something here real quick. I wouldn't short it here yet. If I were to short this thing, this is the inverse. Okay, okay. Yeah, this thing is going to go at least to 40. And I think it probably has the potential to go to 44. The only thing with these Fibonacci retracements, you can see this 50% line back here. That's where it kind of found support there, kind of found support there, over here. So I think if you break this 200-day, you can get a trade here from 38 to about 44 and see what happens. If it goes above that, that means we could be getting higher rates, like maybe a 0.5%, like that. So, yeah, I think this thing's going higher. NASDAQ looks good. I see a lot of accumulation in here also. That'd be a good trade for you. BPFH. Okay, this is the Boston Private Financial. Not a lot of accumulation. MACD is going positive. Okay, if you're following me, I like this 30-day stochastic, and when it gets above 80, that means the trend's definitely up. I like this. You may want, you may want to pull back to a little bit on some of these financials. They've got a little bit ahead of themselves. Trying to see what it's doing today here real quick. It's down to 1321 today, so we're down to here today. Yeah, I think anything around this 1265 or so. Again, I'm buying financials not for a quick trade. I'm looking at the financials as buying them. If I buy it in here, I get a chance to buy it at 1230. I'm adding to the position. I'm not thinking about selling it at that point. Okay, RBA. Okay, Ritchie Brothers Auction. Haven't heard of it. Not sure what happened to this little scoop of time. But you're starting to see some accumulation over here. MACD is positive. I don't know anything about this thing. You've got resistance up here, this 36. Where's the long-term thing on it? Probably a little bit ahead of itself in here. You might want to wait to see if this thing, it came down here and it held this with a gap down. It gapped up above it. That's pretty strong. As long as it stays above this 33 area, this RBA is if it breaks below 33, you want to sell. But until then, you can kind of follow it up with put a 10-day moving average in there, and you can see where that is. As of today, you probably want to look at the around 35.11 would be your stop, and you can kind of look at that 10-day moving average as a place if you're just trading it to get out. BP I like. Let me take a look here. 1 year on BP. It looks fine to me. You can see a little bit overbought, but again, you're above 80. That means the trend is strong and is up. Look at the accumulation down here. They're buying BP. They're buying all the oil stocks. That BP seems to has more accumulation. It may have moved a little bit more. I'm not sure, but I think I like the BP chart better if I had to choose between two of these, unless you want to split it. And let me see. We got any more questions coming for you? JPM. Let's see. RBA cyclical, BTE, and JP Morgan. It's funny, I saw today somebody was downgrading the stocks, the big banks. Maybe that's some of that negative divergence we saw in there. JP Morgan looks good. if you're going to own one of the stocks here, you see some nice accumulation. I think you buy these things. If you get a chance to come down here around 66, you still buy them. And again, these are longer term trade. If you buy it in here and it goes down here on a market pullback, you buy some more. So that's one of the things that I do like. BTE, Baytex Energy. I don't know anything about this thing. Some of these this is probably one of these little oil stocks. Really, between 4 and 5, whether you can get a trade in these things, I don't know enough about it to give you a good guess on that. These small stocks, small oil stocks that got hammered like this. This should be $30-some stocks. As long as they still have a little bit of money left, they're okay. I don't know. I really can't tell you on these stocks under $5. To me, the technicals are a little bit iffy, so I can't really say much on that one. But I do like some of these. I bought this company called Alon ALJ. It was a nice one. There's a lot of these little oil stocks that are trading between $10 and $15 that you can buy that were trading at $45 a while back. And as when their earnings come out here over the next month, and oil prices stay up here above 50 and between maybe at 55 or higher, those stocks are going to turn around, and they're going to you stand to make some pretty decent money on those things. You can trade them, or you can hold part of your position for longer term. That's kind of what I'm doing. I have some that I've made $1 or $2 on real quick, but when they pull back, I buy it again. But I also have some shares that I'm holding for the longer term for when these things get way back to where they could go. Okay. Okay, that's about it. I've gone about 35 minutes. I'm going to go ahead and shut it down. I really appreciate it. We had a good crowd today. I had a lot of good questions, and I really appreciate you joining me. We'll do it again next Tuesday. And again, I just would be a little bit cautious. And the main thing I want you to get out of there is where these sectors are starting to run into some resistance. Watch for the breakout of these pennant patterns on the S&P and Dow Jones. Got 18,116 in the Dow to make sure it stays above that. I'm not sure it's going to at this stage, but the S&P 500 already broke the last week's low, so I'm inclined at this stage to probably remain bearish on the broader market for one more week. Thanks a lot, everybody.